Good afternoon and welcome to your weekly FX options report. Today is Wednesday, June 15, 2011. In midweek trade, the major U.S. stock averages are in negative territory, all lower by at least 1%. Ongoing sovereign debt concerns in the Eurozone, as well as weaker than expected U.S. economic data releases, have been weighing on risk sentiment. Starting out with a look at the Eurozone, protesters in Greece have taken to the streets of Athens in protest of government cutbacks that will be needed to avoid a debt default. Now, Eurozone finance ministers that had met in Brussels failed to reach an agreement regarding a second bailout package for Greece. They will again meet next week to try to find an agreement. Now, moving on to U.S. economic data releases, the New York Empire Manufacturing Index came in lower than expected, dipping into negative territory for the latest month. Meanwhile, the NHB's Home Builders Index fell to a 9-month low, falling to 13 in June from the 16 reading in the previous month. And industrial production and capacity utilization for the latest month here in the U.S. came in slightly below expectations. Meanwhile, consumer prices in the U.S. for the month of May gained by 0.2%, while the core CPI figure rose by 0.3%. Now, moving on to the spot FX market, the U.S. dollar is higher against all the majors of the euro, pound, and the yen. Now, the dollar has rallied amidst a rise in risk aversion. Euro dollar broke below the 142 level in midweek trade. Meanwhile, the UK pound is also being pulled lower, and this does come following a spike in the latest unemployment claimant count over in the UK. And one way to trade your views on U.S. dollar strength or weakness is to take a look at IC's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. And in our next segment, which is your daily trend opinion, we'll take a look at the major IC FX option pairs, starting out with the AUX, the U.S. currency against the Australian dollar. Now, for that pair, the downside does prevail. The RSI for that pair is currently mixed with a bearish bias, and therefore the preference of trading central analysts is short positions below the pivot of 98, with targets coming in at 90.75 and 89.15 in extension. For the BPX, the U.S. currency against the British pound, the downside does prevail. The pair is currently posting a rebound but stands below its resistance. Therefore, the preference of trading central analysts for that pair is short positions below 62.50, with targets coming in at 60.50 and 59.75 in extension. For the CDD, the U.S. currency against the Canadian dollar, the downside also prevails. The RSI is reversing to the downside from a strong resistance area, and therefore the preference of trading central analysts for the CDD is short positions below 99.30, with targets coming in at 94.50 and 93 in extension. Moving on to the EUI, the US dollar against the euro, the downside prevails. For that pair, it has rebounded on its support and stands below its resistance. The RSI for the EUI is also mixed to the bearish. Therefore, the preference of trading central analysts for the EUI is short positions below 71.50, with targets coming in at 68 and 67 in extension. For the SFC, the US dollar against the Swiss franc, the downside also prevails. Now, that pair is currently posting a rebound, but remains within a bearish channel. Therefore, the preference of trading central analysts is short positions below 87.50, with targets coming in at 82.75 and 80.65 in extension. Last but not least, for this segment, let's take a look at the YUK, the US dollar against the Japanese yen. Now, that pair is also under pressure and currently approaching its next support. Therefore, the preference of trading central analysts for the YUK is short positions below 82.50, with targets coming in at 79.50 and 78.25 in extension. Now, moving on to your weekly trend opinion, let's take a look at the U.S. currency. Now, last week, the greenback did reinforce strength against the major currencies, but in the medium term, the U.S. dollar does remain under pressure. Moving on to your portfolio performance, starting out with its performance since the beginning of its inception, which was August of 2007. It is higher by 2,447.98%, and since the beginning of this year, January of 2011, the portfolio is higher by 612.98%. Now we do have two trade alerts for you here regarding puts on the SFC as well as calls on the EUU. Starting out with the puts on the SFC, that pair does remain below its new resistance and also does remain within a medium-term bearish channel. Regarding the calls on the EUU, that pair does stand above its new support and should post a rebound at this level. Trading Central analysts will also be keeping a close eye on the BPX as well as the YUK this week. Now moving on to next week, Trading Central analysts will be keeping a close eye on the CDD, the NZD, the SKA, the PZO, as well as the AUX. Now Trading Central analysts will be watching the CDD as it has struck against its medium-term bearish channel upper boundary, and also the daily RSI is turning lower. Regarding the NZD, the US dollar against the Kiwi, it does remain on the downside. Also the RSI is directed. Now moving on to the SKA, the US dollar against the Swedish krona, it is posting a rebound but stands below its new resistance at the 65 level. Moving on to the PZO, the US dollar against the Mexican peso, it has struck against its resistance at 119.50 and should face weakness towards its previous low. Last but not least, for the AUX, it does remain under pressure and the daily RSI is capped by a declining trend line. And that does wrap it up for a weekly FX options report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a great day.